This is Bloomberg Markets. I'm John Ehrlichman. Bitcoin's had a big move this year. Part of that is tied to this banking turmoil we've been covering, some tied to the lingering views on the inflationary picture, some of it fresh momentum after a challenging stretch. Whatever the reason, an expert believes there are several factors that could continue to play into Bitcoin's favor, so much that he sees the possibility it could reach $100,000 by the end of next year. Geoff Kendrick is head of FX and digital assets research at Standard Chartered Bank, based in London. Geoff, nice to have you with us. Appreciate the time. So obviously everyone's attention is back on Bitcoin right now. What do you think are the primary drivers of what's been happening?
Well, most importantly, John, as you just mentioned, is the banking sector issues that we've had in the US. So when Satoshi first introduced us to Bitcoin in 2008, it came right in the middle of the global financial crisis. And so as a result of that, Bitcoin adoption in that core use case, which is around troubles in the traditional financial sector, took off. And since the March 10 to 12 weekend, when SVB went down in the US, there's been bubblings of more concern, if you like, somewhat similar, but much smaller scale compared to what we saw in 2008. So we've had First Republic over the weekend, of course, and now today, the ETF in the US that tracks regional banks is tracking down around 6 or 7% on the day, which is quite a large move. So financial participants are saying traditional financial sector is looking like it's in a bit more trouble. And as a result of that, we should be thinking about trustless assets that settle T plus zero, are very liquid, and that looks like Bitcoin in terms of its number one use case. And so as a result of that, we've jumped from roughly below 20,000 to above 30,000 briefly recently as well.
So even though cryptocurrencies have proven to be volatile, that idea of safe haven status at a time of uncertainty playing into Bitcoin's favor. As for the economy, and I reference inflation, which is also a tricky one because obviously we were worried about inflation coming into this year, and Bitcoin had a challenging 2022. I think people have different views on that. How should we think, or how do you think about the economy, where the economy goes from here, the fight against inflation, and Bitcoin's role within all of that?
Well, most importantly, we'll probably get the last Fed hike tomorrow, perhaps June, depending on your view. But over the next meeting or two, the Fed will stop tightening policy for now. And the market is then expecting there to be rate cuts down the track. Traditionally, risk assets should trade a little better in that environment. And so Bitcoin, with its core use case as concerns against the broader financial sector, is sort of one positive. But a second positive could become, over time, risk assets doing slightly better, or at least trading sideways. And so that probably helps the broader crypto asset ecosystem to trade okay as well. So I'd expect the impact of inflation hopefully slowing on the Fed perhaps helps there too. So we end up with concerns in the banking sector, perhaps the Fed ending its tightening cycle. Bitcoin miners are a lot more profitable now that the price is at 30,000 rather than 15,000 where it was in November 2022, and I estimate Bitcoin miner cash costs are around 15,000. So they're in good profit now, so they shouldn't be selling coins. So all of these factors are kind of heading in the same direction at a time when investors had been underweight crypto assets, and particularly underweight Bitcoin coming into 2023.
All helpful context for what's been happening with Bitcoin. I just want to get back to your possible scenario outline, made headlines everywhere, which would require Bitcoin to basically triple into the end of next year. What would have to happen to see that kind of performance?
So each of the factors that are laid out in a note at the start of last week, I think can add something like 10,000. So we've gone from roughly 20,000 to 30,000 on the broader financial market concerns that we've talked about, SVB, et cetera. The next big step is the likelihood that Bitcoin within the crypto space more broadly continues to increase its share. So we went from 40% to 45%. I think we can probably get back to 60%. That'd add another 10,000. Bitcoin mine is less likely to sell. That's another 10,000. So already getting to about 50, I think, just on that metric. If the Fed pause after the meeting tomorrow or the next meeting, risk assets trade a bit better. I think that gets us to about 60,000 by the end of this year already on those metrics. And then in 2024, we have the halving cycle, should be around about the end of April. And every cycle, Bitcoin is traded well into that. let's say that adds another 10,000. And then we also probably get some positive cycle going on the back of regulation. We just had regulation pass in the EU that'll help institutional investors enter this sector much more than they have in the past, and probably that'll see volatility lower. I think if we can get that in the second half of 2024, that should be the extra piece, if you like, that can push us through those November 2021 highs, where we got to about 68, 69,000, and head up to that 100,000 mark by the end of 24.